Hello, everyone. Thank you so much for joining in. Welcome to India Factoring Chat Show, Factoring One Stop Solution for Your Global Aspirations. I'm Vinod Wasan, your host for the day. Today, we have an eminent speaker to join with us for the show. Before that, let me take you through India Factoring first. India Factoring offers working capital solutions through the factoring product aimed at converting your receivables into cash. The company is a subsidiary of an European bank, Fimbank PLC Malta, and is registered with the RBI as an NBFC factor. India Factoring is also AD3 category authorized dealer. Through our global network, we offer one-stop solutions around receivable finance. Today, our distinguished speaker will talk to us about global trade insights, challenges, and opportunities in current trade scenario. And also, he solves all your queries pertaining to trade and your business-related, finance-related matters. Stay tuned to us. Let us welcome our speaker, Mr. Sethuraman Sathapan, MCOM, CAIAB, CATF, CDS Advocate. He is currently working as Chief Operating Officer India with Emirates NBD Mumbai. He has 36 years of banking experience with one nationalized bank and five foreign banks in India. He is a regular columnist in a popular Tamil daily Dinamalar, one of the largest circulated dailies in Tamil Nadu, and writing articles related to exports, imports, economics, startups for the last 19 years. He has written more than 1,500 articles in Tamil on the above subject till now. His startup columns are very popular among Tamil leaders. He has also conducted seminars at various places in Tamil Nadu on exports and imports. And he lectured in more than 15 seminars in India, relating to export. He has been invited for international export documentation seminars by Kenyan government for the last 12 years. He has also written 17 books, 6 Tamil exports, import, savings, and 11 in English. He translated UCPDC 600, which is a rule book for export documentation in Tamil, and it is a benefit to exporters, which has been really useful for exporter to make export documentation without mistake. In the last 3 years, he has mentored, advised many youngsters in new business startups. Welcome to the show, Mr. Sathapan.
Thank you, Vinod.
Thank you, sir. Thanks. Glad to connect with you. And I am one of your regular reader in Tamil.
Okay, okay. There
Very
are,
interesting.
and yes, I'm happy to know that you are, and moreover, you are a alumni of Annamalai also. I think.
Yes.
So I also studied there, and actually born and brought up in Chidambaram. That's why
Okay.
that is also that I have a lot of affection towards Chidambaram because almost 21 years I spent there.
Great to know, sir. Okay. So let us get into the show. Let us move on to the first question. The global market was expected to show positive recoveries in the current year end, but the situation seems to be a little different since Russia announced the escalation in war, which will put further stress in Europe crisis. UK also facing highest inflation in the last 40 years, and US Federal Bank last week they have increased the highest interest rate. So altogether, the global economic scenario and the geopolitical situation is getting more stressed up. So how do you see current geopolitical situation and its impact on global economic scenario? And when do you think the recoveries we can expect?
It's you nicely put up the current situation. And what I can say is the geopolitical situation will have a slow recovery only, or slow change, or something like that. What's happening between Russia and Ukraine? That will have a long-lasting effect for all the world, throughout the world, for almost all the countries, I can say, because Russia is the or Ukraine is the major supplier of many items, including oil, pulses, etc. That's why there are a lot of after effects are there because of this ongoing war. I'm not seeing any immediate in the immediate period, it's not going to stop or something like that. It will go slightly, it will go for a longer period or something like that. That is the reason I'm saying that geopolitical situation will not change any big way in the next 6 months or something like that. This is point number one. Point number two is the interest rates are going up because of that inflation, etc. And even US is facing a bigger inflation. That's the reason that they have increased interest rates 0.75 BPS in the last three times, I can say. One is in June and one is in July, and now latest one is September 21st. What's really happening? The interest rates are hovering around 3 to 3.25% in US. Since the interest rates have gone up from 1.5 to 3.25 that now, that forces the money is being taken out from the economies like India, and then it's placed with US. Why they are doing it? Because in India, when they invest, they have to bring the dollar and convert it and invest in stock markets or any other place or something like that, debt market, etc. But now the rupee is depreciating like anything. It is today it's around 81.68 or something like that. Now what's happening when they convert this money at 75 or 77 or something like that? Now when they take it back, there is a rupee depreciation at 81 or something like that. Virtually they are not earning anything. That's the reason they want to invest in a country like a stable country like US, and at a very good rate of 3 to 3.25%. That's why money is being pulled out of stock markets from many countries, I can say. When the money is being pulled out of stock markets, you can see the after effect of that in the last, I can say about in the last 10 days we will take it, or 15 days we will take it. What really had happened before 21st, there was a news that Russia is sorry, US is going to increase the Fed rates, etc. What really had happened? That suddenly market has fallen close to 1,000 points or something like that. And after, when actually this increases happen, then what really had happened? Another 1,000 points and 400, 500, like that. There were a lot of fall in the market. That's why that now it has come to a very low level. That is low level in the sense when I compare with 60,000 or 66,000, it has come to 57,000 or something like that. That's why in the last 10 days that we have seen the after effect. Tomorrow there is a monetary policy meeting is also going to happen at Reserve Bank of India. Certainly I can say 50 basis point increase may be there in the meeting also, tomorrow's MPC meeting. Then that also will have some effect in the market. And though markets have factored that, that also may be having some effect in the market tomorrow. So that overall this week itself we have lost considerable points in the BSC and NSC. That's why that what I can see is improvement in the geopolitical situation may not be immediate, and the global economy recovery also may be very slow because the gas supply to Europe is cut or reduced by Russia. That has got a lot of effect in Europe, entire Europe, etc., especially Germany, etc. And that is the reason I personally feel the recovery may be very slow. And second thing is the Powell has said that interest rates may be increased further or something like that. It may go up to 4.6 next year or something. That economists predict the interest rates from 3.25 may go to 4.4 or 4.6 or something like that next year. That is that, and one more thing that evident in the market is the interest rate in the market is also heating up. That's why that whether it is deposits or advances, the rate of interest are going up. Even the call money rates are going up, and then that you can see it is evident from many companies started. Accepting or taking NCDs and accepting deposits, etc., at attractive rates of 8 to 9% or something like that. Earlier, this kind of advertisements were never coming in. In the recent past, I have seen a lot of companies coming out with NCDs and accepting deposits, etc. That's why that overall the interest rates are going up, and because of inflation, etc. and the recovery may be taking some time. That's all my view.
Thank you. Thanks for your detailed explanation and insights. And as you mentioned, the recoveries are most expected in the market, but still it's not not immediately happening, but it is expected to happen maybe financial year 23, 24. Slowly,
Yes,
the,
sir.
the things will improve. So fine. So now we have one audience questions as well. Let us take
Yes,
this one.
sir.
So, dear panelists, do you think that the current trend of shrinking economy in the US is a consequence of enormous amounts of money that the government released during and after the pandemic? Do you think that India handled it better by giving loans and not free cash from Ram?
Okay, I agree with that listener. Actually, what really had happened is India has given some softs during COVID, but not many or something like that. It was given in the form of loan or something like that, not free. That has helped many MSME companies to come up, actually, to come out of that bad situation during COVID, etc. At the same time, that US and other countries, they were giving a lot of jobs free, I can say. That has deteriorated their conditions, etc. That's why that may be one of the reasons. But only thing is they are flushed with reserves. They are flushed with reserves. That's why that they can spend or they can give this kind of jobs, etc. And we may not be able to compare India with US or something like that. But India handled better. That's everyone is telling that India handled COVID situation better. Because of the simple reason that even during COVID, many countries I have seen. I'm actually closely following up the export situation of India. And at the time, many countries during COVID, what happened? They stopped producing goods, etc. They were dependent on many other countries for import, etc. And at the time, we were without any fear, we were manufacturing goods and exporting it also. That's why the $300 billion export has become $400 billion during COVID. That's why that we have done really well during COVID. I agree with you.
Perfect. Yes, that's very well covered. Hope Ramanathan's questions answered well, and India handled it very well by giving loans and not free cash. Also, the loan what the government has given, it has turned around various MSMEs, SMEs, and the right time. So without much NPAs, the banking system also now very robust figures they have given in the first quarter. So it's well handled. So let us move on to the second question. It's about our Indian economy insights. So it was a great news that India has overtaken UK to become the fifth largest economy in the world. At the meantime, we also noted last week Asian Development Bank has lowered India's growth outlook from GDP 7.5 percentage growth to 7 percentage. And do you think our exporters can able to achieve expected target projections? How do you foresee the current global scenario, Indian export performance in the third and fourth quarters of the current year?
Okay, very good question. Actually, first we'll take one by one. The fifth
Yeah.
largest economy. The fifth largest economy, for me, it was no surprise because the way in which we were growing in the last 5 6 years, that certainly that I expected that we would reach a higher level in the largest economy. Let's say that we have reached fifth. But when we compare with the UK, the population of UK, the population of India, etc., then that we would have achieved a better rating or something like that. But only thing is that no doubt we will achieve fourth or third place in the next few years or something like that. But I'm happy that we have reached the fifth largest economy, beating some of the bigger countries, etc. And certainly it's a good news for every Indian. Second thing is GDP forecast by Asian Development Bank to 7%, from 7.5 to 7%. Here, I feel that 7% is also a good number. That if you are able to achieve 7%, that's itself a good number, I can say. That's why that we should try to achieve 7%. Though the forecast is 7.5, if you are able to achieve 7%, it's very good one. And export target projected. Here, I want to tell you, as I told you earlier in our last question, that during COVID, we have achieved phenomenal export growth actually. It's almost more than $100 billion. We have increased our exports, etc. Because we were fearless in manufacturing activity at the time, and then we were exporting to many countries who have shut their manufacturing activities. And now what's happening? They also started manufacturing. Many countries are out of COVID. That's why they also started manufacturing activities, and the prices also gone up a little bit because of the inflationary conditions, etc. That's why that we have to be very competitive in the area of export, because we all know well that more than 180 countries competing with us. That's why that we should be very competitive in our rates, etc. That's why that I'm confident we will be able to achieve a decent number in the export, above $400 billion, etc. And at the same time, the imports are also going up. That's the concern here. And now, one good thing which I want to tell many of you may be aware of, may not be aware of, the rupee trade. It's googly, I can say, rupee trade. Is that many of you may ask whether rupee trade was there earlier or not. It was there earlier. But what really had happened in the rupee trade, INR trade, what really happening in exports, that especially in a country like Russia. For example, Russia is not able to export to many countries. They were not able to import from many countries, etc. India is a good trading partner for Russia, and that's the reason that in case if the Russia is opening an account, the Russian banks are opening a rupee account with us, then what will happen? There will be always surplus, because we import around $9 million from Russia and export around $3 billion. That means $6 billion is a surplus. Now it will increase, it may be more or something like that during this period. And now what's really happening, the $6 billion surplus, and now they have to invest somewhere. That means if they are able to invest in India debt market or something like that, then G-Secs, etc., they will be earning some interest. That's what they are expecting. That's why that rupee accounts already, State Bank of India, Yes Bank, and UCO Bank and all have already taken approvals from Reserve Bank of India, and they have opened accounts for Russian banks. That's why that I personally feel when these accounts are active, and the accounts are active, there are a lot of people who are interested in exporting to Russia and even take the money in rupee. And that may be a good news for the exporters. All the three banks may activate the accounts in the next 10 days or 15 days. Then I personally feel that exports to Russia will increase, and even that Iran also, that our exports may increase, and because we import a lot of oil from Iran. That's why that this is a good win-win for us. The rupee trade is a good win-win for us. That's why I have no doubt in the third and fourth quarter we should achieve a decent number. If not like the COVID period export or something like that, we should achieve a decent number during third and fourth quarter of the year.
Yeah, thank you. Thanks for the detailed explanation. So we can expect considerable amount of growth, as you mentioned in the
Yes.
third and fourth quarter. That's also, I would like to add one more point. What we are seeing in the market also, even the volume of goods is not going much high, but still the value of goods, because of the input cost,
Yes,
it is
yes.
not, the value of goods is going high. So certain percentage of, really 15 percentage of the volume, again the export value is going high. And as you mentioned, the rupee trade, and there are, every difficult time comes with opportunity. So people are making use of our other counterpart countries also into challenging times. So the China plus one policy, various buyers are diversifying their orders to India for a sustainable
Okay.
solution. So overall, definitely the considerable amount of export can be expected, as you correctly mentioned. And but last year was a phenomenal growth after COVID. That is a different scenario. But the regular growth pattern, definitely it will be a win-win scenario for us. So that's good news. So let us move on to the next questions. Um,
Yes.
One side buyers, we have another question from audience. Let us take this one.
Okay.
So
Okay.
from Jagannathan, dear panelists, how important is export documentation? Where do we get recent updates of
Okay,
export
okay,
documentation? In case we
okay.
missed any recent updates, that's the export documentation will go invalid. I think it's a very more relevant
Okay,
question.
well, it's a very pet question to me, I can say, Jagannathan, because I'm an expert in the export documentation. And one thing I want to tell, I was the first person from India who got this highest qualification in export documentation, that is CDCS, Certified Document Credit Specialist. And I got this qualification in 1998. Then after that, every 3 years, I was renewing this qualification by taking the PDUs, that required PDUs. And then what happens? 6 times if you renew, they will confer a title called advocate, CDCS advocate. I am the one of the advocates. Only three advocates are there in India. I am one of the advocates. That conferred title, with the conferred title from ICC Paris, I can say. And now your question, that if I want to answer, I can answer in detail. Actually, I have done a lot of export seminars for documentation, etc. Documentation. If I always say that if the goods are one eye, documentation is the other eye. That is, in case of LC documents, then what's happening? You have to consider LC document as one eye. If you make any mistake, if you are see, for example, if you are exporting goods and the goods are excellent, and very good quality or something like that. If you make a small mistake in documents, then what will happen? Then you will be end up losing the entire money. I'll just tell you a simple one simple error which one person has done and lost money. As per LC, that in code terms is CFR, okay, cost and freight. Now what happened? This accountant is a very old person, and he knows only C and F, that is cost and freight. That's a C and F, that he knows only C and F, but that was a older encode term, 10 years before or 20 years before or something like that. The latest encode term is CFR, which he forgot to mention. But as per LC, it is CFR only, which he has not put it in invoice. Then what happened? The overseas bank rejected the document. Because of the rejection, because the prices have fallen for the goods, and overseas bank rejected the document. Then that even the importer was not willing to take the document. That's why you should be very, very, very careful while receiving the LC. You should read at least 10 times, or while making the documentation, at least 2 3 people to check it or something like that. And I have done many seminars, and even I translated UCP in Tamil, and given free distribution to many exporters, thousands of exporters we have given. And I have done seminars in Tirupur, Erode, Salem, Trichy, like that. Many places I have done seminars, and apart from 50 other places in India and outside India, in Kenya, etc. Now that's why what I suggest, it is difficult for you people to learn the export documentation. Wherever you have any issues in export documentation, please approach me. I'm ready to give you a free guidance to you people. And anyone willing to take my advice on export documentation, welcome. And absolutely free of cost, I'm willing to help exporters, my expertise, because it's only expertise and knowledge I'm sharing. And that's why documentation is very, very important, which for which you should know UCP, URC, and ISBP, etc. All these rules you should know. Though it's not a law, it's a rule that many 180 countries are following. That's why that you can approach me anytime for clarification, etc. Sorry, I have taken a little bit more time to explain this.
No, no. Yeah, it's very, yeah, that's fine. So anyway, the question is very well answered. So it's how important the documentation also very clearly mentioned, the one eye and how the goods or the other eye. So if anything missed out in documentation, definitely the exporter will be incurring loss. So that's a valid point. And let us move on to the next question. In the current scenario, once the buyers are extending payment term due to the global market slowdown, various international buyers are extending their tenor. On the other side, if you see the vendor or the raw materials or it's in high demand, so vendors are asking for immediate payment. So the SMEs, how the one side the receivables are getting extended and another side vendors asking for the immediate payment. So how SMEs can more efficiently handle this situation? Please explain us.
I fully agree with you. And actually, that SM is contributing a lot on exports for India, and it's a very good contribution done by them. And now, what's really happening to encourage SME exports? There are a lot of some incentives are also given by Reserve Bank of India, etc. But what is really happening, as you rightly mentioned, that for imports, advance payments are asked for it, and the exports extended period. Especially, I've seen recently Bangladesh exports, etc. They don't come below 180 days or 270 days or something like that. That's why that earlier I've never seen a site LC in Bangladesh or something like that. Always it is 180 days or 210 days or 270 or something like that. That's why that extended period, the period are getting extended because they need more time in making the payment, etc. And you know well the crisis in Sri Lanka, etc. There also the payments are getting extended, and that's why the situation. When we export also we are getting the payments late only, but only thing is because of that now what's happening when you give 180 days credit or something like that, you have to necessarily increase the price of the product because you have to build the interest rate also there. And because that interest rate sometimes it's borne by the overseas party, sometimes it's not borne by the overseas party. That's why you have to slightly tweak the price, etc. That is also going against you. That's why that and moreover increase in raw material cost can be attributed to Russia Ukraine war or something. Increase in inflation in various countries, that is also we can attribute for raw material cost increasing, because a lot of India is dependent on a good amount of import also, including oil, etc. That's why that SME exporters dependent on imports are having tougher days, I can say, and really facing challenges. Whereas locally they have a good market. Locally they have a good market and they are capitalizing it. The market is picking up well local, and the festival season is also on, and the festival season sale is also picking up. That is also an indication in the that next quarter results how it will be or something like that. But only thing is, I fully agree. There is a raw material cost increase, and then because of the war and inflation in many other countries, that's why that SMEs are having tougher time. But only thing is, what we can do is we can guide SMEs. That's not happening. The training SMEs may be a good thing. I think we should train SMEs how to save cost or something like that, how to how to moderate their expenses, etc. All these things we can train people. That's why that they are not getting good amount of training like the bigger manufacturing companies.
Correct. Yes.
That one thing companies like India Factoring can think of. Even I can
Agree.
also associate and train SMEs on various things. Actually, that is some people
True.
have some startups have taken that, but in a big way we have to do.
Yeah, yeah, very well said. Because as you very correctly pointed out, the awareness of SMEs is always lacking in our country, and that is why
Yes.
we also organize various webinars to create much awareness in the segment. And very I wanted to add one more point as well for this question, because when it comes to the extended tenure and SMEs managing cash flow, factoring plays a major role
Yes. Yes.
for this thing, because factoring, while taking a factoring, the SMEs can one side the receivables, the extended receivables can be managed efficiently by getting immediate payment from a factoring company. On the other side, but with the factoring the discounted cash, they can make upfront payment to the vendors and manage the purchase as well. So one product, the factoring, they can manage receivables and payables more efficiently. And a much more important point is this is coming without any collateral security. This is unsecured and non-recourse as well. So these are the advantages. The many SMEs not much aware. Still, the factoring in India, mainly mid and the large corporates are using majorly. So now slowly that concept is picking up. So hopefully it will come up much in India.
Okay.
So let
Thanks.
us move on to the next question. In the last 10 years, that we have been seeing lots of openness in the market, and various new age NBFCs and fintech companies are flourishing into the market. And we are also seeing how explain us how the manufacturing company can make use of various trade finance products efficiently to grow their business.
It's a good one actually. I have been following various startups and especially the fintech companies, etc., in the areas of NBFC and the factoring, etc. And that's the reason that I know a good amount of startups who are doing well in this area. And now, what's really happening that there is no good startup company has come out with good trade finance products, are popularizing the trade finance products, etc. India also, all the banks they use vanilla products only. They are not going into any complicated product or complex products, etc. Because they are comfortable with what they are using or something like that. Especially the nationalized bank, etc. Some foreign banks are going for some derivative transaction, etc., factoring and all, because there is a lack of again knowledge gap is there with many banks. I can say many bank or bankers. I can say, or even with exporters, importers, etc. The trade finance products. What are the products available, etc. That people generally know: buyers credit, suppliers credit, etc., or leasing and all. And other than that, many products they don't use it at all. That's why that again here also that education and training of newer products in the market, how to use effectively without much trouble or problem or something like that. Again, that there is a need for training. There is a gap. But what I can say that fintech companies have come up that I think we can see later. And now here that training of newer products is very very important, because I have seen in many other countries this kind of trainings are given free of cost to the SME companies or MSME companies by government, and that is being utilized, and then they are using these opportunities and understand the new products, etc. And even Reserve Bank of India should allow more products to come in rather than the vanilla products in trade finance, and that will really help people, that is especially in the manufacturing sector.
True. Yeah, that is very much true, because we are seeing now the new NBFCs and fintechs and various companies. They are much supporting in the market, and also RBI also recently passed on Factoring Regulation Act. It is it's much promoting factoring kind of new age product in Indian market. And I would like to add another point when especially when the companies, the first the key requirement for the company is the cash flow solutions. So
Yes.
factoring is always the company gets stuck in the growth plan because of lack of cash flow. So factoring always addresses to SMEs and MSMEs category companies to improve the cash flow in a easy manner without collateral security. So the companies, one side they can have a secured lending from a traditional banking lines, and the another side they can have a factoring or any other new age product. So that with a mix of both the product, the company can manage their growth to the next level. So let us move on to the next question. So India's inflation rate peaked at 7.8 in April and is now gradually coming down. And inflation is expected to come down by 5% in June 2023, as per RBI forecast. We are also seeing a positive trends from various market indicators, like automobile sales in August is one of the highest volume in the current year, and also reached a record high of retail sales. Even many of our Indian retailers are going on a big expansion, Reliance and other retailers, where the global retailers are struggling, and many the offtake is not happening. And India recently, various reports we are seeing due to festival season, the retail clothing and footwear divisions are projecting two-digit growth. So, how do you see our domestic market growth against other global economics sluggish performance?
I am very optimistic about the local sale, I can say. And that's why that, as you rightly pointed out, in India, festival demand is really around the corner. And Diwali is one of the festivals celebrated by all in India. That's the reason that that is hardly another 20 days or something like that. That's why the demand is picking up. You have seen big billion-dollar sales by Flipkart and big sale by Amazon, etc. And other than that, as you rightly pointed out, Reliance and all, a lot of expansion is happening. Even in small towns, companies are expanding, especially companies like Big Basket, Reliance, and all these companies. That's why that I am confident this quarter sale, that is October, November, December quarter sales will be really good for all the consumer durable companies. As you rightly pointed out, that vehicle sales. How I still remember when I was around 15 years old or something like that, we have to book a vehicle and then wait for 6 months to 1 year or something like that. Another time, the problem was we were not having that much manufacturing capacity. Now we have plenty of manufacturing capacity, but now there is no production such related issues, but the actual issue is increasing demand. Increasing demand. There is a waiting period for every vehicle or something like that. That's why the auto sales have picked up in August, etc. That's why that is a good indicator. I can say auto sales is a good indicator, and consumer durable like what you have mentioned, footwear and other things are also a good indicator. That's why I personally feel that next quarter will be very good for many companies, and they will see a very good growth year over year. And the local sales are really picking up, and that itself, that's the reason that some companies, when I speak to some companies, why are not into exports or something, sir, local itself we are not able to meet the demand. That's why that exports we should think of later only, sir, like that. This kind of comments I have got from some companies. That's why that I am very confident that we will achieve a better growth in the for this next quarter.
True. Yeah, very well. Thank you for the feedback. So, as you mentioned, the domestic market growth is still very confident compared to even other countries. Domestic markets are in sluggish, but still, our market is more strong because fundamentally it is very strong. So, we can expect good growth for the Q3 and Q4 for the current year.
Yes, yes.
Yeah. Let us move on to the next question. Now, technology plays a major role in lending business. So, more technology-oriented firms, as we discussed earlier, fintechs and NBFCs are coming up in the market and flourishing everywhere. So, and we have recently seen enforcement directors have taken action on many fintech companies and NBFCs for not for the non-compliance. These companies are not registered in India. It is operating from other than India, but they do the lending business. So RBI also recently implemented regulatory framework for a digital lending ecosystem. So the question is, please explain us as a borrower, what are the things they need to check before getting into the new fintech or NBFCs as a loan when they borrow? Mainly, what they need to assess to ensure their the regulatory status.
Okay, good one actually. After the demonetization and digital penetration, the digital ecosystem growth has become unavoidable to India, and the growth has become phenomenal. Now, what's really happening is in the last 3 or 4 years that we have really achieved, or I can say about 5 or 6 years, we have really achieved digitally. I can say one clear example which I can give, or everyone can give, is that UPI payments, which increased to a very good number, I can say. And this is one of the very good innovation of NPCI, that National Payment Corporation of India. And that kind of technology is not there anywhere in the world, I can say. This technology is now many countries are ready to adapt. That there are, I understand that NPCI is going to take this technology to Europe or something like that. This is good to hear, I can say. And now, apart from UPI, this a lot of fintech companies have come in the recent past. As you rightly said, some registered, some companies are not registered with the Reserve Bank of India, and then they have come and doing the lending. That's why that kind of companies were curtailed by Reserve Bank of India recently. especially the Chinese one and all. And other than that, I have seen a lot of startup companies who have started fintech. They are doing wonderful things in the areas of banking and NFC. That especially in the NFC area, that lending, digital lending, I can say. Now, earlier, if someone wants to borrow money or something like that, they have to go to a bank and wait for 1 month or 2 months or something like that. Even for a personal loan, they have to run between pillar to post or something like that. But now, the NBFCs, the new startup companies were registered as NBFCs. They have come out with their own score. It's not a CIBIL score or something, their own score. And then you just upload the statement, upload certain details, your KYC, etc. Then what will happen? You can get the loan within a day or something like that, or within 2 days you can get the loan. That kind of this kind of NBFCs are able to mobilize 100 crores or 200 crores within no time or something like that. That's why that whereas conventional NBFCs are finding it difficult to compete with the digital savvy NBFCs. This is true, I can say, because I've been watching the market. And second thing is there are some NPS are there. I agree with everyone that when you lend money, that there are some NPS, etc. The interest rate is also slightly higher side, etc. But people they don't mind when two people are earning salary, etc. They need money urgently, etc. That they go for this kind of borrowing and all, because they get very late from banks, etc. But now another thing is the fintech companies, startup companies, they use AI and ML technology, that is artificial intelligence and machine learning technology in every area of finance, which has saved thousands of man hours and also helped banks to avoid losses. I can say one classic example. Money laundering is talk of the town. That's why that to avoid money laundering, that is anti-money laundering laws, everything are there. But only thing, these startup companies have come out with phenomenal technology with the help of AI and ML, and that really avoided a lot of money laundering, etc. That's why that the banks are cautioned when the banks are using this kind of technology. They are cautioned about the AML breaches, etc. That's why that banks are saved. That I can say about millions or billions of dollars, I can say, or rupees, I can say. That's why that new age startup companies are doing really well in this area of especially NBFC and fintech and the AI or ML technology. That's why that is increasing. The trend is increasing. The number of companies in this sphere is increasing. That's a good it's a good one, I can say, to hear.
True. Yeah. Thank you, sir. So as you mentioned, here the startup companies and fintechs are doing a really great job, because the ease of doing business is now changing completely the digital ecosystem, and it is now growing in India in very fast. And also, as you mentioned, that traditional NBFCs, they are finding a little difficult. So the consumers can definitely take the loan from NBFCs and fintech. In the meantime, they should ensure these NBFCs and fintechs are regulated, coming under the RBI regulated status. So that's also very important. So we are also now keep spreading the awareness in the market, because we are coming under RBI approved NBFCs, and especially when customer wanted to handle export document and export payments, and I know it is very important it go through the more much regulated entities. Unless the it can the sanctions, we have received various feedbacks from the market. They get a quick sanction from some of the international lending firms, but it's not much sustainable, because they are handling more export payments and documents. Any kind of dispute, the jurisdiction, it is mentioned in the agreement, it is overseas. So the any small SMEs, they are not able to fix a lawyer in abroad to
Get
give
the
their
money.
yeah, get the money. These are the challenges. So it is very very clearly mentioned, we it's not avoidable. So the digital lending system and the new age NBFCs, definitely it is a need of the hour. At the meantime, we need to ensure it is much regulated by RBI. So So we have another question. Let me take this last one.
Okay, okay,
So
okay.
yeah. So as you clearly mentioned about importance of documentation in LC, how
Yeah.
important is documentation in open accounts? Is that the same weightage LC and open accounts, and how it differ?
Okay. Okay. Now, open account documentation is very simple, I can say. But whereas LC document is a cumbersome one. In open account documents, even if there is a discrepancy or something like that, it is accepted. But that you cannot dispute or something like that. Whereas in case of LC, once a discrepancy is always a discrepancy or something like that. That's why that there is a greater weightage is given in rejection of the document, etc. The documents are many times I have seen the customers have sent excellent goods, good quality goods, etc., and they lost money because of poor documentation. That's why that it's entirely different. One is south, one is north, or something like that. That is open account documentation may not be important, whereas LC the documentation is one eye, I can say.
Okay, thank you. Thanks for your insights on open account and LC. It's very helpful. So let us come to the end of the show. So thank you, Mr. Satapan, for joining us and sharing
Okay.
your insightful thoughts on global trade trends and the various opportunities and challenges in the global market. And thank you all. Hope all your questions were answered. And if you want to know more about India Factoring, please visit our LinkedIn page or YouTube channel, or directly you can reach out to us on our direct contact available in our website. And I'm signing off. We'll be back shortly with another interesting chat show with an interesting topic. Thank you. Thank you so
Okay.
much.
Thank you so much. Thank you, Mr. Vinod. Okay. Thank you, Mr. Okay.
Thanks a
Bye.
lot.
Bye.
Bye bye.